Welcome to our first podcast and also live video about charitable giving. So it's the end of the year. It's a good time for us to all consider what is it about us that makes us want to give and want to donate, and how can it benefit me from a tax standpoint? How can it benefit me from a um, a financial standpoint, right? In addition to making us feel good, making sure that we do all of our parts to make the rest of the world a better place, right? So, as we're going through this, obviously, this is for informational purposes only. It's not tax advice, not legal advice. Um, Feel free to make sure that past performance doesn't guarantee future performance, all that good jazz, right? So let's get into it. Let's talk about how clients want to their uh, financial goals, right? Number one, protect your family income. Number two, be able to retirement. Number three, be able to do some estate planning and still be able to donate from a charitable perspective. So, what is charitable giving? Number one, helping others, setting good example, and inspiring, you know, by a personal connection to give back and donate, right? So, when you think about charitable giving, I think the most important to think about is what charities are you currently involved in already? What's the legacy you want to leave? And you're aware of any charitable giving strategies? And have you discussed charitable giving with your financial advisor or legal professional, right? And as you're thinking about charitable giving, donations, things like that, the next thing people always think about is they go, okay, it's complex, it's hard to do. Gosh, I don't know how to do it, right? So number one, make sure tax guidance, contact your CPA, contact your attorney. Number two, make sure you have the documents drafted. Number three, protect your priorities in addition to helping other people. There's different ways to give things and gift money, right? So you can obviously give just cash, you can give stocks, property, brokerage accounts, real estate, life insurance, retirement accounts, anything else, right? That charity finds acceptable, right? So things to consider with different tax treatments. You can do lifetime gifts, gifts at death, a type of asset, or a type of charity. So, a very popular way to donate some money is using your retirement account. So, what some people will do is they will take their retirement account, take the required minimum distribution, pay the income tax to the IRS, right? And then get it to you as the donor, right? As you receive that money, the next thing you do is then you take the same tax deduction from the IRS and you gift the cash to the charity. That's one simple way to understand that as you're trying to get this retirement money to the donor, to the charity, the best way to do it is basically take the withdrawal, the RMD, get the tax deduction, and then donate the funds. Whew. Excuse me, Jamie had to sneeze. So I think the other thing that people consider is, okay, maybe I want to leverage my gift in some way, but I also want to make sure that my family still receives a portion of my retirement assets. So what some folks will do is they will withdraw the money and take the required minimum distribution, pay the income tax to the IRS, get the tax deduction, right? Once they get the tax deduction, the next thing that they can do is use some of those funds to give cash to the charity for right now, use some of those funds to buy an insurance policy, right? And the beneficiary of that insurance policy are is your family, right? So you may be able to use some of those funds to make sure that your family still receives a portion of your retirement account and the charity still gets some of the money as well. All right. So one of the things that you may consider is a qualified charitable rollover, right? So it's really interesting and really simple at the same time. You're going to take the retirement account, pay the income tax. Obviously, it's the IRS, get the tax deduction, and then the IRE does a trustee to trustee transfer to the public charity, right? And the trustee transfer is up to $100,000. Doesn't count towards your required minimum distribution. There's no income tax on the required minimum distribution, and there is no income tax deduction. This is a direct transfer to the charity, right? And it kind of basically removes that you don't have to increase your taxable indemnity to charity while you're in retirement. The next thing that I tell people that they may consider is creating a charitable legacy, right? So the donor may do this. First thing is put the money into the retirement account, right? And then designate the beneficiary as a charity, right? You can update your beneficiary designations anytime. So that means you can change it anytime, and you may require your spouse's consent. So really, just make sure that when you're looking at this and you do want to do that, you can always list them as a beneficiary, and you can change that beneficiary anytime, right? Update it, or they could be a secondary beneficiary, right? So sometimes people don't always have to do a charitable gift directly right away, right now at this instance. They can wait till at the time they pass for that gift to happen. So a very flexible way to do it is also what we call donor advised funds. So donor advised funds are basically earmarking money for charity. So what will happen a lot of times is you can go, okay, maybe this year I had a good bonus, I had a good income year, I sold something that generated income and capital gains, right? And I want to go ahead, I'm very charitably inclined already, but I'm just not exactly sure what charity I want to give the money to. And I'm not sure at what point I want to give the money. I just know that I want to earmark some of this money for charity, right? So you can direct future grants to the charities. You can do lifetime or legacy gifts, right? General, just straight up gifts, and then you get the current tax deduction. So that's a benefit to you, right? So, considerations for you to think about. A gift to a donor advised fund is irrevocable. Generally, what people will use is highly appreciated securities, right? Maybe stocks that they've bought in the past that really have done well, parts of their business, real estate, things like that. They may make future grants, right? And international charities may be allowed, right? So it's really nice to make sure that you can consider a donor advised fund and where you want to put the money to. So think of a lifetime gift as this, right? The donor gifts the property to the donor advised fund, and the IRS gives the donor a tax deduction. Simple, straightforward, as a part of their donation, right? That's an easy can think of and do if they want to. The next way to use a donor advised fund is to gift the property into the donor advised fund. And then the donor advised fund can sell, invest the money. The donor gets the tax deduction, right? And basically, the donor advised fund sells the property for income tax free, reinvests the portfolio directed by the donors. And then the donors can decide at what point do they want to gift the money to a different charity. Okay. The other way that it works is inside of a donor advised fund, they can gift the property into the donor advised fund, right? Sell and then invest the funds. The donor gets tax deduction, and they designate as a beneficiary the charity, right? The donor can also make future charitable grants as low as $250. They could be anonymous, and they can over the lives and lives of their successors, right? So sometimes people choose to do these legacy long-term gifts. Okay. So the legacy gift. The legacy gift is designed is a simple and straightforward way, right? You've got the donors sets, they designate as a beneficiary and gift by will or trust, right? And then these are the successors, right? Into the donor advised fund. The donors designate the donor advised funds, the beneficiary of the assets, or make a gift by their estate or by the will, and name the successors to the donor advised fund, right? Being maybe their children, the next of kin, whatever the situation is. The legacy gifts, right? So they have IRA assets, they have money in their will, the money in their trust. They gift the money to the donor advised fund. The donor advised fund then sells and invests the assets, right, upon death, right? And in a portfolio chosen by the successor, right? The successors then direct grants, right, to the donor advised fund. And then the directed grants from the donor advised fund go into the charity. ways that people may use donor advised funds. So I think the most important thing to consider at the end of the year with donor advised funds is you're able to take a tax deduction today. So let's use round numbers. You make $100,000, you tax deduct 10,000 bucks, put it into a donor advised fund. You're not exactly sure what charities that you want to put the money into. You're not sure where you're going to put the money, but you just know you're going to put money to the charity. But you want the tax deduction this year, right? Because maybe you need it because it's a better income year than you are used to accustomed to having. Maybe there's different things that happen in your life that cause your tax bracket to go up. Maybe you got a divorce, things like that, right? Different things that may cause your tax bracket to go up, and you're thinking to yourself, "I'm charitably inclined. I want to donate the money, but I'm not sure which charity yet, right? Maybe it's my church, maybe it's an organization I'm in affiliation with, right? It's a new charity that hasn't come to my life yet. I just don't want to donate some of this money." Um, I've had folks in the past, what'll happen sometimes is they'll go ahead and start deciding, okay, I want to, I sold a piece of property, I made a good amount of income from it, and I want to make sure that I tie the portion of this money going forward, right? And some of it now, right? So I know my future salary is, let's say it's $100,000 and I usually tie 10%. And I'm gonna go ahead and just earmark future tied money into that account, right? So a lot of people will use donor advised funds in different ways, right? The other one maybe they go, I've got a charity that I really want to support, and they've got a big project coming up, right? It's not quite ready yet, but when it does happen, I want to donate that money to them. And the other advantage of a donor advised fund is the money that is inside of a donor advised fund grows tax deferred, and also is distributed income tax free. So potentially, if you put money into donor advised fund and it grows, it may actually create the gift and make the gift a little bit larger than it normally was in the past, right? So a lot of people love using donor advised funds for those reasons. And I think that's really it to start with for donor advised funds. I think the only other thing that I would tell people and share with them when we think about donor advised funds is different providers, right? Um, Fidelity has one, Schwab has one, TD Ameritrade, well, no longer TD Ameritrade. Um, all the companies out there have different donor advised funds. Most important thing to you is to consider the investment philosophy. Does the investment philosophy fit you, right? Number two, once you go through that investment philosophy, are there assets within the right risk tolerance for you and what you're trying to accomplish from a goal perspective? And then the last but not least part is looking at the donor advised funds and going, gosh, maybe um, I want to donate more money to charity, and this is a way for me to do it with the benefit of reducing some of my income tax today. So thank you all for coming by and listening to us. A couple of things that you may consider calling us from: if you need income from a retirement, if you need income or you have a requirement distribution from your IRA, uh, the reason for the reason you purchase life insurance no longer exists, i.e., your your kids have graduated college, estate tax, business continuation, but you still have the assets. You have highly appreciated stock or real estate that you'd like to diversify. Before you sell your shares of your business, generally before, not after. um, oh, oh no, how do I fix this? Okay, well, either way, that's the general idea on donor advised funds. I don't know if we have any questions in the audience. Let me do a check here. Does not look like we have any questions in the audience. So please, if you have any questions, feel free to send me a message, give me a call, or anything like that. So thank you so much for your time. Thank you so much for listening on a little bit about donor advised funds. And it's the end of the year, the holiday season. Make sure that you're doing a little bit every day to give to someone. And brighten up their day a little bit. So thank you and have a great day.